Pepsi Company Incorporated, an American food and beverage company, reported their second quarter 2023 earnings on July 13. Revenue came in at $22.3 billion, up 10.37% year-over-year. A closer look at revenue by business line saw Pepsi Company Beverages up 10.4% to $6.8 billion, Frito-Lay North America reported $5.9 billion in sales, up 14%, Europe came in third at $3.4 billion, an increase of 13.4%. Latin America realized the greatest revenue growth to $2.9 billion, up just over 18%. The Asia, Middle East and South Asia zone reported negative growth of -7.6%, coming in at $1.6 billion. APAC grew slightly by 1% to $1.1 billion and, finally, Quaker Foods reporting $684 million, growing only 1.3%. The income statement showed that Pepsi's gross profit margin improved to almost 55% to $12.2 billion. Operating profit came in at hefty 16.4% of revenue to $3.7 billion, up 76% year-over-year. The sharp increase was due to an impairment charge Pepsi realized in 2Q 2022 of nearly $1.4 billion from the Ukraine-Russia conflict. EBT increasing 91% at 16% of revenue and net income increasing by 92% to 12.3% of total revenue were also impacted by year-over-year change numbers. Market valuations put earnings per share at $1.99, up 93%. Sales per share at 16 times grew by 10.8%. Cash per share stood at 4.4 times, up 13.6%. Book value per share came in at 12.9 times, slightly down by 4%. PE came in at 23.6 times, but this number was annualized using the current quarter's earnings. PE should be higher. PE growth at 0.25 suggests that Pepsi is undervalued. Pepsi's debt-to-asset ratio is 0.45, up 1.6%, and the debt-to-equity ratio at 2.45, up 15%, showing that short-term and long-term debt increased at the company. At 18 times interest coverage ratio, the firm is more than capable of covering its additional interest payments. Pepsi paid out a dividend of $2.31, which puts the dividend yield of the stock at 1.23%. The dividend grew by 6.7% year-over-year. The enterprise value of Pepsi stood at $298 billion. Turning to liquidity ratios, the current ratio at 0.84 and the quick ratio at 0.6, both showing approximately a 1.5% change. The firm is well placed to cover short-term obligations. The cash ratio at 0.21 improved by 4%, which is a move in the right direction regarding its short-term liquidity metric. Return on assets and return on equity were both much improved this quarter, again impacted by the impairment charge in Q2 2022. ROA was at 2.87%, up 87%. Return on equity was up to 15.24%, up over 100% year-over-year. The equity multiplier at 5.38 shows that Pepsi is using $5 of debt for every $1 of equity.